Okay, so a very warm welcome to our YouTube family. So we are also streaming live on YouTube. So we have a couple of minutes before we begin to the webinar. All those who have connected us through the webinar platform, webinar panel, it's a humble request to kindly turn off their videos for a better bandwidth experience. Thank you. Very good afternoon and a warm welcome for today's webinar. I'm Shubham from Team Webtel. Thank you so much for taking out time for today's webinar. I would like to request all the participants who have joined us through the Zoom panel to kindly turn off their videos for a better bandwidth. Before beginning with the webinar, I would like to mention a couple of points. Kindly ask your queries in the chat sections. We are only welcoming the relevant queries to the related topics. We'll be taking all these queries at the end of the session in a collaborative way. Also request you to kindly stay tuned for the entire webinar as we have expert panelists today for the deliberations. So let me introduce Webtel. So Webtel is a 2-decade-old company, and we were TDS. We were the first to be in the TDS and XBRL compliances. We provide software solution, BPO and KPO activities, education, training, and host to other IT-enabled services. Obviously, we are into compliance solutions. We are partner with various government departments such as NSDL, Income Tax Department, GST, and MCA. We are a team of more than 500 professionals, including chartered accountants, company secretary, legal and software consultants. We have a pan-India presence with physical presence in 10 branches. Here is a look at the bouquet of our products ranging from compliance solution from TDS, tax, GST, XBRL to professional products like virtual office, a website for professionals, web edge, a mini ERP for professionals, to corporate products such as payroll solutions, GST A to Z complete solution for your return filing, invoicing, a bulk e-signing solution, a Webtel Academy, our initiative in education setup. We have recently launched our e-invoicing solution. So we'll be letting you know about this at the end of the webinar. So we are giving an end-to-end solution for e-invoicing integration, and we are integrating with all your ERPs, and we have multiple modes of integration. So totally there are 5 or 6 modes of integration according to the client's need. So in case you haven't finalized your e-invoicing vendor yet, so Webtel is there for you. So our solutions start with the 7-day implementations, and it depends on which mode of integration you're choosing. So it's my honor to introduce today's speaker, CA Sunil Gabhawalla ji. So sir is from Mumbai, a very famous faculty, a speaking faculty all over India, and also invited by ICAI. I'm just cutting the introduction short because we have a very limited time. So sir will be taking 2 topics today, landmark judgments in GST, recent judgments. And he'll also be taking the e-invoicing topic, how to get ready at this time. So we have CA Geetika Shrivastava with us. She has a work experience, a vast working experience, and she was a part of PwC setup and now working with Tatvam Advisors. So she'll be taking GSTR 2A versus 2B and recent changes which has happened on GSTN portal. And also we have a very interesting action plans for the upcoming months. And with that, we'll have CA Rejeev Khandelwal ji, who's the director of Webtel Electors Private Limited. He'll be taking a very small session in practical demonstration of invoice generation, and followed by exclusive Q&A questions, which we'll be taking at the end of the slide. So stay tuned in. So without wasting much of time, I would like to pass on the relay to CA Sunil Gabhawalla ji. Welcome, sir.
Thank you, Shubham. It's indeed my pleasure to be speaking to all the valued clients and friends of Webtel. We have Rajiv has been a very good friend, and therefore it's always a pleasure to have an introduction at this forum. Uh, Without much ado, due to the limited time available, I will straight away go into the topic which has been allotted to me, which is to speak about select landmark decisions under the GST regime. And when Shubham told me to speak about landmark decisions under the GST regime, I felt it should not be a very difficult task speaking for 20 minutes, because as it is, GST is only a 2.5 year baby or 3 year baby till now. However, when I actually started preparing the presentation, I was overwhelmed by more than 2,500 decisions already delivered under the GST regime at various forums, right from the Supreme Court, a few from the Supreme Court, many from the High Court. Again, a deluge of decisions from the appellate advance ruling and the advance ruling authorities. And therefore, it became a very complex task to handpick and cherry pick a few of them. So what I did was I straight away removed all the decisions which are related to advance rulings and appellate advance rulings. As we all understand, advance ruling authorities are the decisions are binding only on the applicant, as well as the triple AR ruling. And because of various reasons, we find many conflicting advance rulings and appellate advance rulings. So except 1 or 2 cases which went to the High Court and some interesting observations therein, we tried to stay away from the advance rulings and the appellate advance rulings. And the next step was to really, therefore, look at the narrow subset of Supreme Court and High Court decisions. Again, Supreme Court 1 or 2 decisions we'll be talking about, which are very important ones. But most of the decisions of the Supreme Court are either in the nature of interim stay decisions. Again, High Court also had notice issues and stay decisions. So I felt that it may not be right to really analyze those types of decisions in a limited time frame, because there might be various dynamics, and as it is, the just a stay or a notice issued type of order does not really mean too much. It can always be reversed at a later point of time. Therefore, essentially what we are going to talk about is again a select set of decisions, for some of them from the Supreme Court and many from the High Court, which have attained finality from the High Court at least. They might be pending in the Supreme Court, and wherever they are, I will be talking about it, but at least from the High Court, wherever we have a detailed decision, that is the only decisions which we are going to talk about today. And then I thought, let me try to bring out a few of these decisions in terms of concepts. Because again, when we go into the subject matter of those decisions, you will find a deluge of decisions on fact specific situations like anti profiteering actions. You find a deluge of decisions again in the scenario of e-way bills, wherein there might be a interception on the transit, and thereafter, therefore, the person has to approach the courts, or quite a few decisions relating to arrests and bails relating to that. So I tried to chaff away all those decisions and said that let's concentrate on decisions which are related to the conceptual aspects under the GST regime. And then we try to look at it in a serial manner. So, and that's how we will propose to talk about over the next 15 to 20 minutes that I'll be discussing. So the first concept which all of us as friends understand very clearly is that GST is a tax on supplies of goods or services or both. The way GST was introduced, it was at that point of time emphasized that it is a sort of all-encompassing, comprehensive indirect tax, and therefore there is a lot of thought process both from the department as well as a lot of consultants and the industry that moment an organization receives any receipt, that receipt or income automatically becomes liable for GST. If it is goods, yes. If it is not goods, reference is made to the definition of service, which says service means anything other than goods. And therefore, the attempt is to say that the concept of GST is to tax each and every income, each and every receipt. And I think on this point, I always had a little bit of skepticism. And my skepticism was because the taxable event under GST, while we say GST is all encompassing and very comprehensive, the taxable event under GST is still supply of goods or services or both. Looked at it from that narrow perspective, receipts or incomes become taxable only if they are a consideration towards the supply of goods or services or both. Not to forget, the definition of supply, the scope of supply also restricts itself only to supplies which are made in the course or furtherance of business. Now, therefore, is there any boundary towards this universe of taxability under the law of GST? And that's where we have two very interesting decisions. One, of course, clearly in the GST regime. The second one in the erstwhile legacy regime, but it's so important that I could not resist the urge to talk about it for a minute. The first and the most landmark decision which I would like to talk about is the Bombay High Court decision in Bai Mamubai Trust versus Suchitra Devi. Now, if you look at this decision, at first brush, this decision is a very long decision and it might look uninteresting to many participants. The reason is the facts of that decision are very, very specific. The facts in that decision was that there was a landlord, there was a owner of a property, there was an unauthorized tenant who forcibly had occupied the property. The landlord started an eviction proceeding against the tenant and the matter was in the courts. Till the time the courts could provide a final decision, the court gave an interim order to the tenant, unauthorized tenant, to deposit some equivalent rental value in the court receiver's account, which ultimately was to be paid back to the landowner. The GST implications of this payment was a subject matter of discussion in this decision. And the decision, the court goes into detail, and with the help of an amicus curiae, it goes into detail into various fundamental concepts of supply. And I think that is where what ultimately the court holds is that the payment which has been made by the said unauthorized tenant in the court to the court receiver is not in pursuance of a voluntary contract between two consenting parties, and therefore does not constitute a supply, and therefore necessarily there is no GST. The important aspect which was to be highlighted here was that there is a money being flowing from the tenant to the landowner, maybe through the court receiver. However, that money is not a consideration towards a supply which is voluntarily agreed to be made by the supplier to the recipient. In that sense, the concept of supply being a subset of a valid enforceable contract was one of the most important principles which this Bombay High Court decision laid down. I think this is very, very important, and it would set up a sort of a foundation towards the development of the GST law. It might be quoted maybe 10 years down the line, 20 years down the line. And therefore, any professional who really wants to have a serious practice in GST should not get misled by the head note to say this is something to deal with court receiver and court payments. And we are not going to anyways have many examples of this nature. So let's not look at it. The principles which it sets out are very important. And where will these principles come into place? A very common place where the principles will come into play would be an example of liquidated damages. When a supplier supplies certain goods or a contractor undertakes a contract for a client, most of those contracts have a liquidated damages or a penalty clause, which will say that if there's a delayed work done or certain quality issues, then certain amounts will be deducted or damages will be recovered from the contractor. There had been a lot of debate earlier on whether these damages would constitute a consideration for agreeing to do or tolerate an act. And in that context, this decision brings out the key issue to the fore. That being that there was really no voluntary contract between two consenting parties to supply or tolerate a deficiency in a service. And therefore, there cannot be any question of a supply and no question of GST. Similarly, when you look at liquidated damages, you look at notice period recoveries and many incidental payments which might be triggered. They may not attract the levy of GST because they may not constitute supply under the general interpretations of the phrase contract. Similarly, the existence of two parties is again a very important aspect of a contract and therefore of a supply, and in the earlier regime of a sale or a service. And this principle was something which was always debated in the case of mutual associations like clubs, societies, and residential welfare associations. And matters were there in the courts, in the service tax and the VAT regime. All of them went to the Supreme Court, the constitutional bench in Calcutta Club, in a very elaborate decision, took a view that there is actually no difference between an association and its members. And therefore, clubs or associations are not liable to pay either sales tax or service tax. Friends, while this decision talks about service tax and sales tax, in my view, the principle which it lays down that a service would require a duality of persons becomes a very important cornerstone or a benchmark which might be used in GST. I would believe that just like Calcutta Club held that service tax or VAT is not payable under the old laws for these types of membership associations, I would believe similar position would prevail under the GST regime as well. And therefore, of course, there are much more stronger reasons. One important reason also being that such types of associations cannot be said to be entering into transactions in the course or furtherance of business. Not taking too much time into that, I think these are two important decisions on the fundamental aspect of the taxable event under GST, which is supply. Having said that there is a supply, all of us are aware that if there are a multiplicity of supplies, one has to go into the principles of composite supplies versus mixed supplies. The code under the GST law is very clear as far as a composite supply is concerned. You look at the principal supply and apply the tax of that principal supply. And if it's a mixed supply, then the highest rate of tax will become applicable. Now, there are two interesting decisions which might be considered here. And the first decision somewhere brings out the whole scope of composite supply versus mixed supply and the extent to which divisible supplies can be clubbed together. Because somewhere the word composite supply talks about bundling of supplies, and therefore somewhere the assessing officers at times want to artificially bundle or try to assume or presume a bundling. Now this is where this again came through the advanced ruling route, and Abbott Healthcare had a very peculiar types of facts. It was manufacturing a machine, and along with the machine it was also selling certain reagents, which were reagents and consumables which were to be used within that machine. So what it did was there were separate transactions entered into, the first one for leasing of the machinery and second one for actual day-to-day continuous supply of the reagents and the consumables. Now, in an advanced ruling also application, because both the products had different tax rates, an advanced ruling application was filed to examine or obtain the tax rate applicable for each of these products. The advanced ruling authority went into a bit of an adventure and said that, look, you are saying that I am leasing a machinery. You are also saying that there are consumables being supplied. and therefore you are saying this one attracts X%, another attracts Y%. Please tell me what rates should be applicable. The advanced ruling authority said, no, 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 I don't think these are two separate supplies. This is a common bundle of a supply, and the principal supply will be that which is in the nature of reagents, and accordingly the tax will be applicable. That was the position at the advanced ruling level. The SSC went into appellate advanced ruling, which also upheld that same order, and then Abbott went into the High Court. Now, against a triple AR order, the GST law does not provide for any mechanism for a further appeal. However, the writ jurisdiction, the wisdom of the judicial wisdom always comes into place, and that's where they knocked the doors of the Kerala High Court. The Kerala High Court did observe this aspect. However, they said that if there is a injustice being done in terms of the process of the entire activity of the advanced ruling authority, in that case we can intervene. And intervene they did, and they laid down some very interesting principles. Two important principles which it laid down. It said that if you have a series of composite supplies, if they have to be considered and bundled together as a composite supply, they should necessarily provided by the same taxable person. Now, in the factual matrix, what was happening was one supply was done by X GSTN, another supply was done by Y GSTN, and therefore there was to that extent a distinctness of persons involved in the composite supply. And therefore, this was something which the court observed, that it has to be necessarily supplied by a single supplier. For a single supply, you cannot have more than one suppliers. If there are two suppliers, it necessarily means there are two supplies. And more importantly, it said that both the supplies should be in conjunction with each other. Here, the supply of the machine is happening on day one, and thereafter there is a continuous supply of the consumables and the reagents. And therefore, they said you cannot treat these as composite supplies. These are divisible supplies, and individual product related tax implications would be applicable. Now, compared to that, we had a very interesting scenario coming out in a writ petition against one circular issued by the CBIC. Under the service tax law, and always electricity has been outside the purview of service tax also. At that point of time also, there was a circular issued and an interpretation was levied to say that if there are any incidental activities carried out by discoms in terms of electricity meter supply or some wiring or certain things being done, which was necessary for the sale of electricity, the dominant intention test will apply, and therefore these are all in the nature of sale of electricity, and service tax was held to be not applicable and clarified to be not applicable. But when GST came in, the CBEC did a U-turn and said that these ancillary activities become liable for GST because the concept of composite supply uses the word taxable supply. Friends, as you all know, electricity is not taxable, and therefore the CBC circular said that since electricity is not taxable, we cannot apply the composite supply theory at all. And that's where the Gujarat High Court, in a very detailed judgment, says that the concept of dominant intention, the time-tested concept laid down by BSNL and echoed by many of the Supreme Court decisions, continues to apply. And you cannot just say that because there is a word taxable supply within the concept of composite supply definition, therefore, in case the original, the predominant supply is exempted, I will not apply this test. Effectively, the Gujarat High Court quashed that circular and said that ancillary activities carried out by discoms against recovery of charges from consumers are to be treated as incidental to the sale of electricity. And since electricity is exempted from GST, such ancillary charges would also be exempted from GST. That takes me to an interesting decision in the case of Lalita Muralidharan versus Range Forest Officer. This is not from a GST authority, but this was from a commercial contracting perspective that the matter went in a civil court. And in the civil court, the issue was when there is an auction of timber being carried out. And in the auction, there was a GST applicability on the auction price. If the buyer is an SEZ, whether the SEZ unit will be eligible for zero rating. Of course, not going into the overriding provisions relating to supplies to SEZ, the High Court goes into the concept of place of supply, highlights the concept of destination-based consumption tax, and somewhere it says that if there is even a subsequent movement of goods, even though the delivery is taken outside the SEZ area, if the delivery is taken with an objective to ultimately move it into an SEZ area, the zero rating benefit should be available to these types of supplies. This is one interesting decision which I would like to take in terms of exemptions. And agricultural produce, as we all know, has been a subject matter of a very detailed interpretation because of a very different type of a verbiage given to the definition of agricultural produce. Coupled with the fact that exemption notifications have been elaborated, there is always an adventure at the side of the department and government authorities to try to very narrowly read these exemptions. So we had a very interesting scenario where there was an agency which was storing milk in its cold storage. But before storing the milk in the cold storage, there was a process of a first time chilling and sterilization and packing which was required to be done. Now, when this is being done, it was being clarified that this would amount to a process which is not undertaken at the farm, and therefore milk would no longer remain an agricultural produce, and therefore this chilling and storage of milk would not be eligible for the exemption entry provided under notification 12. And this matter went in a writ jurisdiction before the Gujarat High Court, and Gujarat High Court said that chilling of milk again is incidental to the actual storage of milk, and since it is an incidental process, you don't really have to go into whether it is done by the cultivator or by a third party. In that sense, some interesting principles come out in this exemption related judgment. So I thought I would just touch upon that judgment. A couple of judgments on input tax credit. Of course, there's a plethora of decisions, but I think two important ones. The first decision, which talked about input tax credit which has already been earned being a vested right. And this is a small ray of hope which is coming after a disastrous decision from the Supreme Court, which said that under the GST regime, input tax credit is not a vested right. Mohit Minerals case, it is the policy prerogative of the government whether they wish to give input tax credit or not. Now, what this decision basically, the facts were that there was an input tax credit available of compensation cess for tobacco products. And because these products were in inverted duty structure, initially the refunds were entitled for these types of tobacco products. At one point of time, the inverted duty structure refund was disabled for these tobacco products. And the question was that if there were certain procurements done before that date, whether those procurements and ITC which was already accrued before that date would permit me to claim a refund of inverted duty structure attributable to that activity. And in Ashish Katiyar's case, the Allahabad High Court said that yes, there is a vested right, and if there is an amendment which denies this refund of compensation cess which has already accrued and attributable towards the inverted duty structure, then it amounts to modifying an accrued rights which is not permitted. So I think this is a very interesting and a positive decision in contradistinction to the Mohit Minerals decision of the Supreme Court saying that input tax credit is a vested right. I am not talking about many high court decisions wherein the arbitrary lapsing of credits or the reversal of credits in real estate and restaurants has been challenged. Because they are all short decisions, we will not talk about those decisions as of today. The second and a much talked about decision is the decision of the Orissa High Court in the case of safari retreats, where section 17(5) was being discussed and debated, wherein there is a restriction of claiming input tax credit of construction services which are used for your own account. And in an interesting decision, again looking at the principle of valuation, again bringing the concept of destination based consumption tax and avoiding of cascading effect, the Orissa High Court got swayed, and it has taken a view that if there is a landlord who gets a mall constructed, then the construction services procured for constructing the mall is not for his own account, because the mall is ultimately meant to be let out and rented, on which GST would be payable on the commercial renting. And therefore, the Orissa High Court read down the section 17(5) to say that for own account would mean only situations where a person constructs and uses it for its own self-use and not for further renting. The matter is before the Supreme Court, and therefore one should not read too much into this decision. One might have to wait for a final verdict from the Supreme Court, and that would really set the tone to this entire context. Lots of decisions on interest. Of course, the biggest disaster started when Mega Engineering, Telangana High Court said that interest is payable on the gross amount and not on the net amount. The scars of that are still not over. Very recently, after 3 or 4 assurances from the GST Council, ultimately we've got a prospective notification of the proviso to Section 50, and there is a press release saying that for the past we will not demand interest. But we all know that at ground level, lots of things are happening. While all these things are happening, we also see overzealous assessing officers trying to recover interest under the GST law, saying that since interest is automatic, we can straight away attach bank accounts and recover the interest. And in that context, I think this Jharkhand High Court decision becomes an important to analyze. It says that while interest is tagged to the tax amount itself, recovery of interest cannot be automatic. It has to be consequent to a show cause notice and an adjudication process. You cannot straight away move to a recovery proceeding without undertaking the show cause notice and the adjudication process. That takes me to a couple of interesting decisions on export refunds. Many are there, but one important issue which happened at the time of transition from service tax to GST was the utter lack of clarity and confusion in the industry, whereby many SSEs, vendor exporters, claimed the higher, as you know, drawback had two rates at that time: a higher rate where Senvet credit benefit is not taken, and a lower rate where Senvet benefit is taken. So they claimed higher drawback and also claimed refund on account of ITC. Necessarily, this is not possible. However, if that has been done through error, courts have intervened and said that if the differential drawback is paid back or returned, in that case, the refund on the export of goods should be allowed and balance has to be paid. In fact, courts have gone ahead and even allowed interest on delayed refunds on this account. Second is a very recent decision in Pitambara books. Of course, this has been ultimately implemented on the portal also. And as you know, when you are claiming refunds either under accumulated ITC or under inverted duty structure, you find that there is a definition of net ITC, and the formula thereafter gives you a refund which is a proportion of the net ITC. And this net ITC does not include an opening balance. Initially, the refund provisions permitted you to claim refund only for a particular month, and that resulted in a lot of unjust because businesses will have procurements in 1 month and supplies in another month, and therefore there was a lot of imbalance and a blockage of credit and denial of refunds on that account. Ultimately, the CBSE relaxed the conditions and said that you can file a clubbed refund application across multiple tax periods, but within a same financial year, not across multiple financial years. And this was something which was a subject matter of a writ in the Delhi High Court. In Pitambara books, it was held that the CBSE cannot lay down such artificial restrictions by not allowing clubbing of refund applications across multiple tax periods. And there was a instruction that accordingly a new circular should be made and the portal should be amended accordingly. I think all of that has been done. So I think this is an interesting and an important decision which one may bear in mind. Another very recent decision from the Ahmedabad High Court in the context of inverted duty refunds. As you know, Section 54 uses the words that if the rate on inputs is higher than the rate on output supplies, in that case, you are eligible for the refund of inverted duty. When you go to Rule 89, somewhere the formula uses the word inputs. It does not permit the input services, the tax paid on input services, to be entering the formula of the net ITC. Now, necessarily, when you are looking at GST, the whole objective is to subsume the taxation of goods and services. And therefore, when the matter went to the Ahmedabad High Court, the Ahmedabad High Court held that the word inputs used in Section 54 would also cover input services, and the omission of input services in the formula for eligibility of refunds is incorrect. I am aware that a similar elongated argument has just been concluded in the Chennai High Court, and maybe we would be awaiting a decision on that regard shortly on similar lines, perhaps. So I think this is again one ray of hope for SSEs who are governed by the inverted duty structures. That takes me to duty-free shops. This is something wherein there has already been an amendment to Schedule 3, whereby supplies which are made from warehouses, bonded warehouses, are treated to be neither supplies of goods nor services. In fact, we are also told that there will be no requirement for reversal of input tax credit. But we always say, "Ye dil mange more." And therefore, in this case, Sandeep Patil, who was located in a duty-free shop who was in the business of a duty-free shop, filed an application in the Bombay High Court asking for a refund, saying that these supplies from duty-free shops should be treated as eligible exports. And that was where the Bombay High Court said, yes, if you are anyways zero rating so many things, and you ultimately, if you want to give a duty-free benefit, you cannot just say that I will give you a duty-free on the output side, but not give a zero rating on the input side. Anyways, you are giving, you are not requiring him to reverse the credit. If you are just allowing him to accumulate, that does not serve any purpose, and therefore the Customs Act was also referred to in extreme detail, and accordingly it was held that the duty free shops, supplies from duty free shops to departing passengers who will be treated as exports and eligible for refunds. There have been a couple of other decisions, Atin Krishna, the Flamingo, all of them holding a sort of a similar view. Again, a much talked about decision, Mohit Minerals. Again, a scenario where there was some presumption being created in terms of reverse charge mechanism. We are all aware that when I import goods on a CIF basis through a notification, we were told that I would be required to pay IGST on the presumed freight component of the import of goods. And this was something which the Ahmedabad High Court, Gujarat High Court struck down, saying that look, this is a transaction between an overseas shipping line and the overseas shipper. The payments are made there. I am the Indian importer is not a privy to the transaction, therefore you cannot presume him to be a recipient, and reverse charge mechanism cannot be applied in those types of situations. A couple of procedural decisions and I will wrap up my discussion. One relates to the provisions of sections 129 and 130, both of them fairly draconian sections. Lots of decisions talking a little bit about it, but if you want to really understand the fundamental principles, I think I will recommend you to read this decision of the Gujarat High Court in the case of Synergy Fertigem. What this decision tries to bring about is beautifully explain the provisions of section 129 dealing with detention and seizure, and the provisions of section 130 dealing with confiscation of goods. And there was always an impression that are they mutually exclusive to each other? Does one follow the other, and things like that? And that's where the court says that look, both of them operate in totally different spheres. The provisions of detention and seizure apply when there is a movement of goods, and while the goods are in transit, there are certain e-waybill violations or certain documentation which is in contravention of the provisions of the law. In that case, there can be an interception of the vehicle, there can be a detention of vehicle and goods, and there could be a seizure. And normal assessment would happen in that scenario. However, when you go to section 130D, 130 talks about confiscation of goods in case of certain offenses. And there we are told that when you're looking at confiscation and you're looking at those offenses, they are more serious crimes, and therefore there is a clear intent to evade a tax which has to be established. In that sense, both of them operate in separate spheres, and in some cases they might intersect also. So you can have a scenario that there is a violation of an e-way provision with an intent to evade a tax. If that be the case, there will be an intersecting joint between the two of them. Very nicely explained by this decision, the concepts of section 129 and 130. I think it's an interesting read to make. Let me go to the next procedural aspect about advance rulings. And this is one of the reasons I always am a bit skeptical of advance rulings. Very rhyming word to that is adverse rulings. And I think that's what it has made. It has advanced the confusion in the industry. It has advanced uncertainty. The whole objective of advance ruling has not been served. And with due respect, I can always say that. And therefore, we generally frown upon people applying for advance rulings. But yes, two interesting High Court decisions touching upon some of the scope and processes of advance rulings. The first one, a very interesting decision, wherein the party was applying for an advance ruling whether the services are export of services or whether it could be an intermediary service. And the appellate advance ruling authority threw the matter out, saying that this is not covered within the scope of the advance ruling application process. And the Kerala High Court says that one of the aspects covered within the scope of advance ruling authority is determination of a liability to pay tax. Now, when you say determination of a liability to pay tax, that tax could be CGST, SGST, or IGST. And therefore, within that itself, that germinates a possibility to interpret the place of supply. Because until you interpret the place of supply, you cannot determine the correct liability to pay tax. And therefore, the Kerala High Court held that place of supply could be a subject matter of advance ruling applications. Which this, of course, I am aware that there are many contrary decisions as well, and therefore you should be a little bit skeptical about going through this process in advance ruling. More so because of the next decision which we are going to talk about. And this was a very interesting scenario wherein the JSW Energy applied for certain interpretations relating to job work, and the decision of the AAR did not come in its favor. Then matter went to the triple AR, and against the triple AR order, JSW filed a writ in the High Court. The High Court said that look, the GST law does not have any process of appeal beyond a triple AR, and therefore the High Court cannot interfere on merits of triple AR. However, it allowed the appeal only to the restricted extent to say that we feel that there are some inherent contradictions in the AAAR ruling and the principles of natural justice have not been followed. Therefore, the matter was remanded back to AAAR to take a final decision in this regard. So, therefore, we have to be very careful while applying for an advance ruling. You might get at a situation where you are stuck and thereafter there is no recourse available to you. I think that was all that I had to speak about as of now. I would now request Shubham to take over, and I will once again come back after some time for the e-invoicing and the question answer sessions.
Thank you so much. I think it was a very short span of time wherein you explained the remarkable judgments and the consequences and the observations that we have. It was very enlightening. So as we are having a limited time, so over to Geetika for the topics that we have.
Thanks, Shubham. I'll just quickly share my screen.
Yeah, please. So until Geetika begin with her presentation, so just in case any one of you is facing any problem connecting to the audio, we have shared the link of our YouTube live streaming. You can, switch there at any moment of time if you have any problems related to audio. And also keep posting your queries. We'll take them at the end of the session. Thank you so much, and over to Geetika.
Very good evening to all of you. Thanks, Shubham, for giving me this opportunity to speak about some relevant topics on GST. And before that, I would like to thank Sunilji for throwing so much light on the recent GST-related judgments, which, on and off, we sometimes tend to skip. And there would be a lot of, implications on our day-to-day businesses. Going on to my part of session, I'll be covering three major issues, major topics. One is regarding the GSTR 2B versus 2A. Then I'll quickly take you through the key 15 ITT action points, which since September is already approached and we are nearing ending September, there are certain aspects that we need to take in mind, take into account while closing our September books. And of course, some very major updates that have happened on the GST portal recently. So to begin with, we'll start with what is the difference between 2B and 2A. Now, to understand what is the difference between 2A and 2B, we need to first know what is 2B. So if you see 2B is nothing, it is just a statement which is similar to GSTR 2A, which is giving you the details of all the input taxes that you have been paying on your purchases. Now, someone would say that if it's similar to GSTR 2A, then why do we have 2B? So in one line, I would like to say that it is an enhanced, or so to say, a modified version of 2A, wherein you get to see some specific details in such particular format, in a particular manner. And also there are some special features, some user-friendly features which have been incorporated in the 2B. So I'll quickly take you through all those special features or the additional features that have been incorporated in 2B, which makes it a little more user-friendly and also facilitates trade while looking into their purchases. The first and foremost feature which we have observed and we got to know is that the statement is a static statement. When I say it's a static statement, it means that it would be available on as it is format on a particular day. So government has decided 12th of every month to display this statement on the portal. And this would have all the data which is punched in by your supplier by 11th, and those who have filed their returns also on 11th. So any supplier who has filed a return on the 11th of the next month, all those details will be available by the 12th of the next month in your GSTR 2B. And this would be available in the form of a PDF or an Excel, but it would not have any data which is filed, the returns for which have been filed after 11th. The other feature about this 2B is that because it's a static return, it's a static data, it is easily, instantly available in a download form. Unlike your 2A, because 2A was having a dynamic data. So every time when we used to go into the portal, the data used to get updated, and then used to take some time to download the return, the GSTR 2A return. This will not be the case with 2B. It will be readily available for an instant download over the portal. Then when I say that this particular return has a specific data, by that I mean to say that they have divided the data of your input taxes into eligible and ineligible input tax credit. Now, in order to decide what is ineligible input tax credit, the government has applied only two tests. One test is when the location of supplier and the place of supply of any supply is in the same state, but the recipient whose 2B is being downloaded or whose 2B is being generated is in the another state. All those purchases and the taxes paid on those purchases will be parked in the ineligible category. Another test that has been applied is the non-compliance of the time limit of section 16(4). So for any returns which have been filed after the next financial year in the month of September, after September of the next financial year, those transactions will also be parked in the ineligible category. So for these two tests, while applying these two tests, government has immediately pushed out the data from the total input tax category to an ineligible category, and the remaining remains in the eligible category. In the subsequent slides, we'll see that what all is getting covered in the eligible, and of course in the ineligible, we know the parameters that the government has already adopted. Another interesting feature of this return is that they have, which we were not able to see till date in any other return, they have conglomerated with the ICE gate, and they have got the data which is pertaining to the import of goods, and also the goods which are coming from the cross border, and also to include the SEZ supplies, because any supply which is coming from SEZ for the goods is treated as an import under the law. So this amount of these details will also be auto-populated in 2B. So now you'll be able to see even those details which you are paying, the taxes that you're paying on the import of goods, including the SEZ procurements. Some other additional features that this return is carrying with it is, number one, the section-wise advisory. The section-wise advisory is that they have divided the data into some parts, wherein they have bifurcated into the types of documents, whether it is a B2B supply, whether it's a debit note, it's an invoice amendment. So I'll show you how it looks like on the portal in the subsequent slide. So they have bifurcated the sections to ITC available, not available. Within ITC available, the supplies which are coming through invoices, debit notes, amendments, or any other way of transactions that are happening on the portal. Then they'll also, once these Q2B is generated, the emails and SMSs will be sent to the taxpayers. So they get a trigger that for a particular month, GSTR 2B has been generated. They can go onto the portal, look into the data, and for the purpose of their vendor repo or looking into their ITCs for the current month, they can pull out the data from there. Like I said earlier, the data is available in PDF as well as an Excel format. This is an enhancement that has happened on the portal, getting a data in an Excel format of such a huge number. The data is available, which will also have some text search, some filters. They have also given the functionality of supplier-wise data, searching. So if we see, this is how it is going to look on the portal. The tabs will be ITC available. There'll be another tab of ITC not available. On the downside of the portal of the screen, you can see the 2B is available in the form of PDF as well as in the form of Excel. When I talked about the section-wise breakup, if you see part A has ITC available, which is as per government's basic test that they have applied. What all ITC will be available. They are further bifurcated into the supplies which is coming from the registered persons, the one which is coming from the reverse charge. So people who are registered, but those whose transactions are taxable under reverse charge, that category is separately shown. Any supply which is coming from ISD. And if you see the fourth serial number very clearly talks about the import of goods, and they will also show you about the SEZ supplies. Then part B talks about the ITC reversal, wherever you're not allowed to take the ITC for various other reasons, the ITC reversals will be done. Similarly, if you see the ITC not available tab, all other ITCs which are coming from registered person, which is coming from ISD, and the transactions which are taxable under reverse charge, all those kinds of bucketings have been done. On the portal, if you see, this is the kind of search filters and the categorization is available. If you see on the extreme left, there's a supplier-wise details which is available. So this is something which helps us to quickly search the details of those suppliers whose ITC we want to check, whether they have reported, whether not reported. You can just punch in the name of your suppliers. You can do the text search, or you can do the filtration. All the filter, etc. is available. You can use this Excel sheet like any other Excel sheet, and you can find the respective details that you wish to look at while you are finalizing your ITCs. Now, once we have understood what is GSTR 2B and what are the special features, let's understand what is the difference between 2B and 2A. So, like in the very beginning, I said that the statement which is coming in the form of 2B is a static statement. This is what differentiates it from GSTR 2A. 2A is a dynamic statement. It keeps on changing on day-to-day basis, depending upon the suppliers who are filing their return, because there will be many people who will be filing returns on time-to-time basis. Someone may file on 10, some may file on 11, 12, and so on and so forth. So every time when you go onto the portal and you download the GSTR 2A, the data is getting updated from the back, because there would be some suppliers who would have filed their returns maybe the very same minute when you are trying to download it, or maybe sometime in the morning, afternoon, whichever period of time. But in 2B, they have fixed one cutoff date. Any data which is filed by that date will be posted in the 2B. Anyone who's filing any return or any data after 11th will not be shown in that particular month's 2B, but certainly it will be shown in the next month's 2B. So that's how it becomes a little more easy for any user to download the data and keep it available. The next point of difference follows from here. The timeline that happens while downloading GSTR 2A is because of the real-time updation that keeps on happening at the backend. So the portal takes time to update those details which have come. But in case of 2B, because there is a cutoff date, at the end of the day, when everyone has filed their return, the data will be posted, and then there is no need for any updation required on that statement. As regards the source of information is concerned, 2A is having the data which is filed by GSTR 1, 5, GSTR 6, 7, as well as GSTR 8. But in 2B, we have GSTR 1, GSTR 5, and GSTR 6, and the additional data which is coming from the ICE gate, which is pertaining to the import of goods. Now, when coming to the generation of return, GSTR 2A gets auto-populated even if the supplier has submitted their GSTR 1 and they have not filed it. So data starts reflecting in GSTR 2A, while you could see whether it is filed or not filed, that flagging is there. But the data is still there. You can see the person has not filed the return, although he submitted the data on the portal. But on 2B, you will be able to see only those details which have been filed. So anyone who has not filed their returns, those data, the details for those suppliers would not even reflect in 2B. And like I said, in case of GSTR 2A, the import related data was missing, which has been added in 2B, which helps you to reconcile your purchases relating to the import of goods as well. Just to give a very simple example, how the data will flow in GSTR 2B as against GSTR 2A. For example, if you have an invoice which is dated January 2021 and it has to be reported in the return of January 2021, the due date of filing of that return is 11th February and it is filed also on the same date. Then this data is going to flow both in 2A as well in 2B. In the second scenario, if the return, the invoices of the month of January, but the same has been reported in the month of March. March returns due date is 11th April. So in that case, the data will flow in the month of March 2A as well as 2B because it is the month in which you are reflecting the data, irrespective of the date of invoice which is being reported. The third scenario is the differentiator. For the same invoice of the month of January, which has to be reported in the month, which is reported in the month of January, but the return has been filed in the month of April. So assuming someone has missed onto the filing of any return, January details, January month's return, and that return is a delayed file return in the month of April. As far as the 2A is concerned, the data will start reflecting in the January 2A with a flagging that the return has not been filed. But the same data will not be available in 2B in the month of January. It will show only for the month of March once the supplier has filed the return. So this can cause in, delay of ITC. There are some doubts also, prevailing around this, which we'll discuss in subsequent slides, that if a supplier is filing delayed return, how do I match and, how do I take 2B as a basis? So this was a very layman example, which I thought I'll take in the session so that we know how to differentiate between the auto population of data in 2A and 2B. After understanding the basics and the features of this return, we thought let's also understand what is the advantage of 2B. The first and foremost advantage is that this helps any taxpayer in doing a vendor profiling. Because today, when you see a 2B, you will be able to know that which all vendors have not filed their returns on time. And because of this, it can also cause any delay in ITC. Because assuming 2B is taken as a base for taking the ITC, this could hamper your time limit of taking the month in which you take the credit. So it helps you to quickly go back to your vendors and ask them to file their returns on time. It also helps you in identifying the month in which the credit is to be availed. Other point is the summary view of eligible and ineligible ITC, which is available on the return. It gives you a dashboard view to the top management. Anyone who's seeing the first view, they can immediately look at it that, okay, these are my ineligible ITCs which are outrightly denied. And then there is some bucket of eligible ITC, out of which there may be some more exercise which would be required, but at least you know this is the bucket on which you need to work on. Another thing that is happening is that any detail which is coming from 2B will also be populated to 3B. So this will help in, populating your ITC data on the very real-time basis as soon as the 2B is created. It also eliminates the need of downloading the data for the past months or past periods. So for example, if you're doing a reconciliation for a particular month, then in case of 2A, you had to download the entire data, or even for that month, you are downloading it. It takes a lot of time because of the real-time updation that keeps on happening. So this return will eliminate that need, and it will always result in a quick download of the data. And the last one, which is very important, no separate verification from the IceGate is required for the import data, because now the data is directly flowing from IceGate to 2B, and you can always quickly look at the 2B to see the import data. After looking into the details, that the features and the specific categories and the specific tables that 2B is being providing, and the basis of the preparation of 2B, we found there are certain areas which would still need some work from the taxpayers' end. To begin with, the first and foremost thing is that this data does not contain any import of service data, or any RCM service data which has been supplied by an unregistered supplier. It will also not have data where my supplier is a GSTR 5 is filing GSTR 5, or if it's a GSTR 6 return, because the due date of those returns will fall after 12th of the next month, and this data will be freezed on the 11th night, and 12th you'll get the data. So the data which has to come from 5 and 6 will be missing in this return. Similarly, is the case where someone has delayed their filing of GSTR 1. They have not filed it on 11th, maybe they filed it on 13th or 14th, but they filed it 3B on time. So again, those details will not be available in this particular 2B for a month for which we are looking at. This return also does not have any facility of accept, reject, and pending, which was the thought process of GST law, which was introduced when it was introduced, that there would be an interactive return where you could look into the details and accept, reject, or put pending any ITC which is not required to be taken, or you want to reject some data and ask your vendor to make those changes. So anything which has been filed by the vendor will become final and will come on that 2B with no modification or possibilities required at your end. Definitely, you can go back to your vendor and ask them to make the amendments if there is any discrepancy. Where then one very important aspect which has been missed while bucketing between the ineligible and eligible credit is that the government has taken only two criteria and two parameters for deciding the ineligible credit. So just to reiterate, the two parameters are either if your location of supplier and place of supply is in same state and that state is different from the recipient state, then the credit is not allowed. And if any filing which is happening after the September of the next financial year. But there are so many other scenarios where we have ITC reversals. For example, we have 17.5 situations where the ITC credit is not allowed. But this to be return will take all these transactions into the eligible criteria. So which means we have to do some more self-assessment. We cannot just blindly rely on this return and start taking credits. There will be common credit reversals. There will be reversals which are happening due to non-payment within 180 days. So such scenarios, we'll have to still drill down into the details, do a self-assessment, and then do the reversals on our own. Which means the return is still not in a form of ready to use, which any taxpayer can quickly just take in, punch the data, and start filing. Like your GSTR 5 and GSTR 6, we also have certain set of taxpayers who file their quarterly returns. So again, if a quarterly return filer is filing their return, even if he has uploaded some data on his GSTR 1, till the time the return is filed, it will not flow in my GSTR 2B. So again, this return is not taking care of these situations, which we are otherwise also facing in a normal scenario. So even in 2 ways, you get the data while you see there is the data which is uploaded, but while doing matching and all, we look into the details of only those taxpayers who have filed their returns. And of course, we have a provisional credit formula which we use for taking additional 10% credit. But this return is still not taking care of that scenario, which means this return is still not in a form which any taxpayer can just pick and start parking the number. There are a lot of things that has to be done even after getting this return being generated on the portal. And of course, it adds to another set of reconciliation data. As it is, we were doing 2A versus purchase register. We were doing 2A versus 3B. Now, 2B coming into play, there will be another set of data which needs to be reconciled. You might have to look into 2A versus 2B and see what is missing in 2B and how you can, push your vendors to do their filings, do their reportings, and so on and so forth. Now, there is some open issues which we found in the case of GSTR 2B. While the government has populated the return, it is available on the portal. We know from August 2020, from September 12th, they have given the PDF format and the Excel format on the portal. But to our surprise, there is no legal provision and, so to say, no amendment in the Act till date to incorporate this 2B. Therefore, follow the question that whether I should take 2B as basis for any of my calculations. Let's say for 36-4 calculation, till now we have been taking 2A as a basis, whether 2B can be taken or not, whether department can ask me to do the reconciliations, because today department is asking reconciliations or GSTR 2A versus purchase registers versus 3B. So they are looking into all those reconciliation. So can start department now start asking me reconciliations with 2B also. Also, whether department will take 2B as one of the basis for giving me the ITC refund. So according to us, since 2B does not have any legal backing, it would be taken more as a reference material. For any other calculation, we believe that 2A still holds true in holds good as per the law and should be taken as the basis for our 36-4 calculation, whether it is for any other reconciliation, and for that matter, in those cases where your suppliers are filing return after 11, but let's say on 13th or 14th they have filed. So some people in industry, they have put in 15th as a cutoff date to pull down all the ITC and take the ITC basis on that data for filing their returns on the 20th of the subsequent month. So according to us, you can still follow the same practice till the time 2B gets any legal sanctity or a legal backing under the provisions of the law, which is soon to be there. Let's see how government is going to bring it. Till then, we believe that you can continue with the current practice of taking ITC basis GSTR 2A. Now I'll move on to the next section, which is on the key 15 IDT action points for the September. Like I said, that September has already, we are halfway through September, and there are a lot of things which were required to be done in the month of September. So it's a quick snapshot of what all needs to be done so that you don't miss any timelines, you don't miss the bus for taking credits or any, reportings or any rectifications that could be done in your returns. The first one, the rectification of errors or omissions in your GSTR 1 and 3B. September is the timeline where you can file, make all those amendments and the rectifications for any supply that has happened for the previous financial year, that is 1920. So wherever you find, you can quickly, revisit your supplies, or maybe you would have got some information or some feedback from your customers also. So if you have any such open issues, pending queries from your customers, please quickly look at that, make those rectifications and amendments in your GSTR 13B, and then because September is the month wherein you can make those changes. This is the timeline, because after you make these changes, after this month there'll be some repercussions. There will not be the person who's on the customer side may not get the credits or may not get the benefit of the rectifications that you're making. Second important thing is issuance of the credit note. Very important, because this is a credit note is something that has also implications on your books of accounts. You have to issue the credit notes for the invoices which are pertaining to 1920. Please take out any of those such scenarios, and specifically those cases where you are giving discounts, you are having any trade discounts or incentive schemes that you are running. Those types of transactions you need to highlight, pull them out, issue the credit note so that you don't end up paying extra taxes, because you'll not get the adjustments of the taxes that you have paid on the invoices if these credit notes are not issued within this month and reported in your September filing. Debit notes is another area where you need to, keep on keeping a check that wherever you're giving any other additional, you're recovering any additional charges from your customers, please issue those on time so that your recipient can avail the ITC. Otherwise, they might have difficulty of taking ITC on such debit notes which are issued after September. The fourth one is again very important for every business which is running today, availment of ITC. Wherever you have missed on any ITC of any invoices or any debit notes, please quickly go back, look into those invoices. Wherever you had doubts, you were not able to take it within the period of that financial year. Today is the time, September is a time when you can take. So you need to look back, see any missing invoices where you have not seen, because in practical scenarios, we have seen sometimes the invoices are somewhere lying in the system and they don't reach the, team which has to book the credit. So maybe you can, reach out to your teams and respective teams and get the details of any such invoices which is for the financial year 1920, take the credits, and you can accordingly finalize your returns for the September. Then comes GST audit. We know this is a timeline that has been given by the government, 30th September. We are hardly left with 12 days for the month, and please, quickly finalize your audits. Whosoever is doing the audit for your organization, provide them all the information on timely basis. Try and close it as soon as possible, because till date we have not heard any extension news, and let's not wait for the last days. Please be prepared for your audits, and so that you don't miss your any timelines. Common ITC calculation is again a very important aspect, because where you would have done some calculations, ITC reversals, and then you would have, by the end of the year, there would be some finalizations of those reversals. So please again go back, look into those reversals, do them. If there is any short reversal, please pay that. If you have reversed extra, reclaim those credits, because you'll not get the opportunity to reclaim this credit then. So effectively look into all your ITC aspects. Similarly, Rule 36 for calculation. Because of the COVID-19 situation, the government gave us the benefit to do a cumulative calculation for February to August, and you have to do this in the month of September. So you need to do it. If you miss this, then you might end up paying some interest liabilities in case you take extra credits, which is beyond the permissible limit. Wherever there are any RCM liabilities, please see all your RCM purchases, import of services, unregistered purchases, wherever you are liable to pay taxes. This is the time you can pay your taxes and take the credits also, because maybe you may be able to pay the taxes at a later stage, but the credits may always be disputed in future if you take the credits at a later stage. If you have any compliance, appeal, show cause notice, etc., for any previous law, pre-GST regime, excise, customs, etc., and the due dates for which were due from 20th March to 29th September, 30th September is the deadline. Please quickly go back and see if you are still having some pendencies. 30th September is the last extended deadline by which we can file those appeals. Otherwise, again, you face the rigors of non-compliances. Another requirement that has come up from the law is about the e-invoicing, and the government has declared 1st October as the date for go live for the businesses having turnover more than 500 crores. So please see, where are you on date? How is your system preparation going on? Whether you have started the testing of your solutions, or whatsoever solutions you have been taking, whether you have mapped the fields, you are ready to go within in next 10 days, because 1st October is something which government is looking at, and we mean when it's 1st October, we need to be ready at least a week before, so that the first invoice that you are issuing on the 1st of the October, it is going on to the IRP portal for generation of the e-invoice. There's another change that happened over the customs rules, customs notification. The rules of origin have been changed. New rules have come, which is effective from 21st September. Please see what all requirements are there, what our documentation is, because it's more of a documentation work that has to be done. It's some extra obligations that have been imposed on the importers to to ensure that whenever they are taking the benefit of any free trade agreements. So see what is the requirement, what is the procedures that you need to follow, what is the documentation has to be taken, because any import that is happening after 21st September will have to follow the rules of Karata. Then MEI scripts, FTT compliances, RCMC certificates, other returns. So these are anything which is falling on in the month of September. Please ensure that you are doing their renewals. So for example, scripts, if you're having scripts which are expiring on 30th September, please use them, utilize them for payment of your duties. Otherwise, you'll not get anything out of it. Any FTP compliances, any advance authorization which is expiring, get the license renewed. RCMC is expiring, get them renewed. Normal returns, of course, whatever is due date, please follow those due dates. Then the last segment of the session is key updates on the GST portal. I'll quickly, not take much time on this, because these are certain portal related changes. The first one is very important, which the industry has been
Not getting the voice. I think we've lost voice. Please check with her. Geetika, we are unable to hear you.
I think she has some issues with her internet, sir. Let me check once.
Otherwise, we can begin the next session if she's not available.
Hello?
Yeah, you're audible now.
Yeah. Where did I got disconnected?
On the last slide, ma'am, where you were presenting. So you have to again share your screen.
Yeah. Visible?
Yeah. So maybe
So
we start with this and wrap up as the time is already passed by.
Sure. So I'll just quickly wrap up. I'm not sure
Sure,
if I was audible from the first point, so I'll
Yeah, let's start.
repeat it. So regarding the delinking of credit notes and debit notes with the invoices, I was mentioning that the law had changed in the 2019 February itself, but the portal was not supporting this delinking. It was still asking us for linking the credit debit notes with the invoices. So now this facility is available, so the taxpayers can freely issue, credits and debit notes, single credit debit notes for multiple invoices. The second change that has happened in the portal is that the portal has enabled an offline matching tool between 2B and purchase register. This is something similar to the vendor record, which we used to do for 2A and the purchase register. Now portal has given some 7 parameters based on which they will match and prepare some report. The report will always have the distinction between matched and mismatched, probable mismatch, etc. Third important point is of the bunching of refund claims across the financial year. This was another pain point for the industry where the people had to file refund claims on monthly basis. Then there was some circular which allowed you to file, multiple months return, but which are falling within the same financial year. But now the portal has allowed in certain specific cases, they have allowed you to bunch the refund claims across the financial year. There are some exceptions to these cases. For example, if you're claiming refund from the cash ledger or you are claiming refund of any excess GST that you have paid, then this clubbing is not allowed. The portal has also allowed negative values to be flown in 3B. However, on practical front, we saw that in some cases it's still not flowing. So maybe the portal, the GSTN people would be working at backend. But soon, wherever people are facing this problem, it will get resolved quickly. Now, other thing that the GSTN portal has done is they have linked GSTR 1 and 3B as well. So that helps you in preparing your 3B. But having said that, in case anyone has made any error in GSTR 1, they will still have the opportunity to make amendments in 3B. So it is not that it's going to freeze the figure in 3B, but it's only a facilitation measure. Due to COVID scenario, the nil filing of 1.3B through SMS is still continuing, and it looks like it is going to continue for some more time. Then GSTR 8 returns, there was some difficulty for the e-commerce operators for amending the tables where they are reporting the supplies made by their vendors. They could make those amendments only once. Now the portal has allowed to make those amendments multiple times. So this is another ease of doing the compliances that has been brought by the portal. In the case of registration, a new procedure has been introduced of Aadhaar authentication. This is more to ensure that people who have Aadhaar, they will get quick authentication done and they'll get the registration within 3 days. But in case you don't have it, you don't provide the Aadhaar authentication, then the long-term process of physical visits, etc., has been prescribed, which can take as long as 21 days to get a new registration. GSTR 9 has allowed you to download table 8A, which gives you the input service details. Earlier, it was only a figure which was coming, and last year we all were struggling, while matching those figures. So now you have the dump of that figure and you can match it. And the last one about e-invoicing, because this is the hot topic of the day. E-invoicing, government is doing all the validation, updations on the portal. They have issued all the FAQs, etc. And they are keeping the taxpayer updated with any change that is coming on the e-invoicing portal.
Yeah.
That's it from my side, Shubham.
Yeah, thank you so much, Geetika ji, for covering up all these topics in a very short span of time. And I think the 15 points that you gave our audiences is surely going to help them, coping up with their compliances, GST compliances. Again, I would like to invite CA Sunil Gabhawalla ji to take the facilitation on the very hot topic, which is GST invoicing. And it is just 12 days which is left, wherein it is going to be real for life in invoicing. Over to you, sir.
Thank you, Shubham. Thank you, Geetika, for a wonderful action points for the month of September. And the last point which you took up was the point which I will now continue, which is relating to the e-invoicing. E-invoicing is one of a very important and ambitious project of the government. And ultimately, we are likely to see the light of the day from 1st of October, on, of course, in a manner. What the government wants to do through e-invoicing is typically try to bring in much more compliances. Geetika did talk about 2A, 2B, and matching and reconciliation. And in the last 3 years, sometimes out of frustration and sometimes out of a mere joke, we say that GST is nothing but reconciliation, reconciliation, reconciliation. And that's where the government feels that if somewhere we are able to monitor the preparation of the invoice and have our penetration at the first level of preparation of invoice, perhaps all these reconciliations may reduce drastically, because then there is a lot of standardization in the process. The second objective also to ensure that we are able to somewhere curb the dark horse in terms of the fake invoicing, or people raising invoices and then running away and not paying taxes and things like that. So what both these objectives in mind, the government started this e-invoicing process project. And this is one of the presentation slides of the GSTN portal at the initial days when the e-invoice was being launched. And they said that when you're looking at advantages of e-invoice, they quoted many advantages, right from accuracy cost reduction and better relationship, paper elimination, and better capital management and increased controls. Now, if you look at these advantages, you will find that none of these advantages really relate to something of GST. And friends, that is what the long-term vision of e-invoicing is. The objective is really to replace e-invoice by the replace the paper invoice by the e-invoice. Like today, if you look at cutting of checks, to a large extent, the trades have moved on to NEFT, RTGS, and other payment mechanisms. And therefore, somebody just drawing a check, not that it has eliminated, but it is redundant to a large extent. Same way, the government is assuming that once e-invoicing is stabilized and is in place, people will no longer need to make a paper invoice. According to me, that is a far-fetched dream, but when you look at the GSTN portal, it says reporting to GST is just a byproduct. And automatic filing of returns, reconciliations, all of that are just byproducts. The clear advantage which the government is trying to push is to really reduce the paper trail and reduce the red tape in the entire process. But when you really go to the micro, you will find that it doesn't work that way. And when you go to the micro, the first basic starting point is Rule 48, which starts by bifurcation. And that bifurcation says that the invoice shall be prepared by such class of registered persons as notified by the government on the recommendations of the GST Council, by including particulars contained in GST INV1, by obtaining an IRN, and we'll keep on talking about this word IRN, invoice reference number, by uploading information therein the to such conditions as may be prescribed. So a lot of it is verbose, but essentially two things which we need to bear in mind for a particular class of registered persons. So therefore, you have now two classes. One class where e-invoicing is applicable, one class where e-invoicing will not be applicable. And moment you say that you are dividing and having a class, you automatically eliminate all the advantages which was talked about in the earlier slide. Be as it may, we do understand that it will not be possible for such an ambitious project to start across the country at one phase. And government is looking at a phase-wise implementation, firstly starting with a turnover above 500 crores and then slowly phasing it down. And at some point of time, we don't know when that point of time will come, but at some point of time, it will replace the entire spectrum. It will be spread across the entire spectrum of the taxpayers. What is expected in an electronic invoice? You have to have certain minimum data which they have prescribed in INV1, which we also talk about as invoice schema in tech computer languages. And by putting the data in that format and sending the data to the government in what is known as a JSON format, the government portal will process all the invoice reference number, QR code, and it will return this reference number and the QR code back. The QR code will be an image which you have to put it in your invoice and then print the invoice. So this is the process which we are told as per rule 8 sub rule 4. Sub rule 5 says if you are covered by this class of persons, then if you issue an invoice in any other manner, like a manual invoice, then it shall not be treated as an invoice. So
I think we've lost the voice.
Yeah. Sunil ji, we are unable to hear you. I think there is some issues with your connections, internet connectivity. So let me just get connected to Neeraj ji.
Try to call him.
Yeah. So until then, I would like to request all the participants to kindly ask their queries in the chat box, and we'll be more than happy to take them.
मैं वो कह रहा था मैंने एक डेबिट नोट क्रेडिट नोट जो भी हमें इशू करने हैं 19-20 के सितंबर वाली लास्ट डेट लगती है तो हम भी इशू कर
Yeah. So sir has got connected. Yes, sir. Sir, are you able to hear us?
I think there is some
sir, please.
internet issue.
Yeah, no problem, sir. Please share your screen, sir.
Just give me a second.
So, sir, it's even yeah.
Is my screen visible?
Sir, yes, sir. You just need to be.
As I was highlighting, I was highlighting 3 important facets under Rule 48. That, and we now go to the actual notifications from Rule 48. 2 notifications. Earlier, one of the notifications talked about 500 crores, another one about 100 crores. But now both the notifications have a same limit of 500 crores. One notification deals with B2B transactions. And we are told that for all these B2B invoices, you have to obtain an IRN and QR code from the GSTN portal. In fact, that portal is managed by a National Informatics Center, NIC. Second notification then says that if you have a B2C transaction, then necessarily you can't do any IRN because IRN has GSTN of the recipient as one of the mandatory fields. But here you are told that you will impose yourself, you will create what is known as a dynamic QR code. Now this QR code is a bit different than the first QR code which comes from the GST portal. The QR code in case of B2C transactions will be generated by you only, and it will be a dynamic QR code which will facilitate online payments by the customers. So that is what has been prescribed in terms of notifications. Both these notifications become effective from 1st of October 2020 unless there is an amendment to that. So what are the types of transactions and what is applicable? So we are told for B2B, and again we are talking about all document types. It can be an invoice, a debit note, or a credit note. You will have a common applicability of IRN as well as a QR code from the GSTN portal. For invoice, IRN and QR code will be required. Same way for a B2G, when you are dealing with the government, there also an IRN and a QR code will be required. But for B2C transactions, there will be only a dynamic QR code, self-generated QR code, which will be there. So that is the basic difference in different types of transactions and applicable. So I once again got connected. I'll just quickly share the screen once again. So we are told that in case of reverse charge mechanism transactions, if the supplier is governed by the e-invoicing mechanism, in that case, even though he does not end up paying the tax, the invoice which is generated for RCM will be generated through the
Check
e-invoicing.
karo abhi just.
Hello, am I audible?
Yes, sir. Yes, sir. You are audible, sir.
So these are the various scenarios of applicability of this entire provision. And as we started to create a class of taxpayers above 500 crores or below 500 crores. So how are we going to decide what is 500 crores? So it will be based on the aggregate turnover as defined under the GST law for 2019-20, which will include all the taxable supplies of the same PAN number, including branch transfers, etc., etc. So you have to look at the GST turnover. In fact, what the portal has done is, on the e-invoice portal, they have themselves looked at the aggregation of the GST turnover, aggregate turnover, and they have tried to define the taxable supplies of the same PAN number, including branch transfers, etc. So they will facilitate this process of sending the
Again, we are not getting the voice.
There is some connection issue with sir's internet. Let us once again try to.
Yeah. What I'll do is I may skip the presentation because it unnecessarily my internet is a bit patchy, and I might just be able to speak without the internet. I think that may make a little bit more.
Yes, sir. Yes, sir.
Uh,
Sure.
Sunil, even for e-invoicing, we'll be needing good internet speed. Otherwise, invoices will not be uploaded.
that's exactly one of the inputs which we need to share to the government.
Right.
So basically, when we are looking at 500 crores, the point which I was trying to make was that we will have to look at the GST turnover and not the financial turnover. Now, as we all know, and I'm sure Rajiv will take us through that in much more detail, the process of e-invoicing would be that it will complement your current ERP and the invoicing softwares. What will be expected is there are certain minimum basic invoice schema wherein certain fields are defined to be mandatory, certain fields are optional, and certain fields are continuously mandatory. So depending on the type of the field, you will push the information which is generated from your ERP in a temporary manner. You will push that information through a JSON file to the government portal. Now, necessarily, there are multiple ways to do it. Either you can develop a code yourself, or you can appoint a agency like Webtel, who is an ASP GSP combination. So they will set up a sort of an API interface with your ERP, and they might have some certain plugin modules also. So they will facilitate this process of sending the information in a JSON format to the government portal. Once the data is reached to the government portal will generate an IRN and a QR code and a digitally signed invoice from the government portal. Along with the IRN and the QR code will be returned back. That QR code will then be incorporated into your invoice. They have left the size open-ended, but they say that it should be something which you should be able to scan, and you have to put it on your invoice. You are specifically told that it has to be put on the invoice and it cannot be separately printed on another piece of paper. So this is the overall process flow which one needs to bear in mind. Now, when we are looking at this process flow, I think 2-3 things which we need to bear in mind is there has to be, because most of the organizations have multiple invoices, the process will not be like your GSTR1. In a GSTR1, you send all the data to your consultant, or maybe even if you're doing it yourself, it's on the 8th or the 9th that you will start working upon it, and by 11th you will somehow manage the internet speed and the errors, the resolutions, and the reviews, and upload it. But when it comes to e-invoicing, it is to some extent like your e-Webel mechanism, where it is too much operational aspect involved into it, in the sense that there will be a business level dependency. If you are not able to generate just like you are not able to pay a bill, you are not able to ship your goods. Same way, in the absence of an e-invoice, you will not be able to send an invoice to the customer, and therefore your business, your collections, and everything will get impacted. And that's where the joke which we just talked about the internet quality and will become very, very relevant over here. What will also become relevant is the fact that you will have to look at some stable long-term solution. While the government will permit an offline tool and an Excel upload, and there will be utilities which will convert Excel to JSON and things like that, it can happen for one-off transaction. But if you are having thousands of transactions of invoices to be raised, debit notes to be raised, credit notes to be raised, you will somewhere have to look at automating your ERP and automating your linking your ERP with some third-party automated software or a self-generated software, and then push the data so that there is the least possibility of human error, least possibility of reconciliations, and the challenges may not come on that front. One important thing which we need to bear in mind is that if you make a mistake in an e-invoice, you can cancel the e-invoice within a period of 24 hours only. And that 24 hours is a running 24 hours. Thereafter, you cannot cancel it on the IRP. Automatically, the e-invoices will flow from the IRP onto the GST portal. But at the time of filing GSTR 1, you may be able to do a manual process and make the cancellations manually in the GSTN. So therefore, what will happen is today we are talking about books versus GSTR 3B, GSTR 3B versus GSTR 1, GSTR 1 versus 9, 9 versus 9C. You have any n number of permutations and combinations in reconciliation. And I'm aware that there are some of my friends who would also go into reconciling e-way bills with your GST returns and things like that. Now, when you're doing all of that, please note with e-invoicing coming into place, there's one more leg of reconciliation coming in, wherein you would also be now required to reconcile your e-invoice data along with your GSTR1 data and along with your financials. And therefore, good business processes will become very, very important when you are moving into the new regime as far as the GST is concerned, e-invoicing is concerned. Looking at the current scenario, there have been representations which have been sent to the government seeking for an extension of the time limit for e-invoicing. But as of today, I'm not aware of extension which is really announced. It may be important crores to really get ready for the purposes of e-invoicing. I think that was a brief discussion which I wanted to do. I don't want to go into the technical discussions of e-invoicing, for which my very dear friend Rajiv is already there and he will be making a detailed presentation on that. So I would like to hear that, and thereafter we can have questions if there are any. Over to you, Rajiv. Shubham.
Thank you, Sunil ji and Geetika ji for the wonderful deliberations. So now let us begin with the practical demonstration, how things will happen, and we'll be showing how things will be done in SAP. So those of you, things are similar whether it is SAP, Navision or other ERPs, but I'd like to show how it will happen in SAP. This is how the screen will look like. The e-invoice dashboard will be there, and here the billing type, the billing document, etc. These things, everything will be automated. But just if you want to do it manually, we can try and do that also. Go to we can either generate directly also the IRN without seeing any details, etc. Whatever the pending invoices will be there, we can generate, or we can see the details of the invoices. If we want to just initially probably one or two invoices, I want to see whether all the details are proper or not. So at the beginning, you can see all these IRN generated. Already IRN has been generated, or e-invoice has been prepared for these. And at the lower portion, you can see IRN is pending. So one by one, we'll try and generate. So 76 and 77, we'll try and generate the IRN. And we can even see the details of this thing. And invoice number and 77 and to generate IRN like this. And IRN should be generated. Let us see what happens. So IRN has been generated for number 76, but some error has been given for 77. You will see that also. So first, the one which has been generated, let us see how it will look like. PDF we are able to show you from the payload department of the IRP. Let us see. This has been converted to PDF document containing the QR code and other necessary information as per the e-invoice format. This is how it looks like. Then the second, the error message has been given. It says that the IGST amount is not there. It is 0, so the rate is 28%. And also the HSN code is not proper. So because of these reasons, the error has been thrown. So let us go back and see. And before that, let us also try to cancel GS10 IRN, the one which has been generated. If due to some problem, there's some problem. As Sunil ji has said, in 24 hours, we can even cancel the IRN. So this cancel IRN facility is also there. We will cancel the IRN and we'll get the message that IRN has been cancelled. So, but before that, it requires why it is being cancelled. So we will put in the data there, select the relevant option that it's a duplicate value or data entry mistake. And here also some remarks have to be given. We'll be able to again click on cancel IRN facility on the menu and IRN will be cancelled, e-invoice will be cancelled if we're done within 24 hours of uploading. Now again, let us go and see whether it has been cancelled. Here you will see in the PDF document is a watermark of cancelled, which denotes that this e-invoice has been cancelled. Now let us go back to the error case, and here see we can correct the error. We can refresh this so it comes as IRN generation pending, and let us try and update this information to the correct HSN and the correct IGST amount, and once again try to generate it. Now I will generate for the invoice number 77. We will go and click on generate IRN. IRN has been generated successfully. It just happens in a fraction of a second. You won't even know, and it would seem as if you're doing from your own system. Again, this information you can go further down and see the various conditions, etc. You don't need to go to another T code, etc. And the entire information is available, even the invoice details, etc. From here itself we can see. So it's quite user friendly in that manner. All line items, details, etc. They are viewable from here. See. And on the invoice dashboard, you can see the various information. And as I said, the various line item details, as I told you, and they can be viewed from here for a particular plant or for a particular date. You can see the information right away. All these facilities are available. So that was all I wanted to show you in the demonstration. And I'm sure we have many queries, and we can take those queries, the queries about the first two sessions, and even the practical issues. We can talk about those. Shubham, we can take from the chat, or if somebody wants to ask on voice.
So I'll begin with the queries, and meanwhile, the participants can raise their hands, so we'll directly unmute them. So the first question is
There's a question that IRN sequence number, is there any sequence number? So it's a randomly generated number. There is no sequence number as such. Your invoices will be having the sequence number. And let me tell you that this invoice number, whatever invoice number you are issuing, that will remain the invoice number. It is not replacing the invoice number. Wherever you have to quote invoice number will have to be quoted. Invoice reference number is only a number for reference, which ensures, which tells us that this invoice has been uploaded at the portal. So no, it's a randomly generated 64-digit alphanumeric number. Yes.
yeah. So Geetika, I have a question for you. How GSTR 2B works for the recipient against supplier filed GSTR 1 on quarterly basis?
Yeah, I touched upon this part. I'll also reiterate the answer once again. In case of a quarterly supplier, the person who's filing quarterly returns, say for example, he's filing return for a period April, May, June. your 2B will be populated for the month of June. So he'll file the return for this quarter on his due date, and as a recipient, you'll be able to see it in the month of June 2B.
So I have another question related to the QR code. What is the content in dynamic QR code in respect of B2C supply?
In case of B2C supplies, it is in the case of B2B supplies, it is the GSTN number of the buyer, the seller, amount, taxable amount, tax amount, etc., and HSN of the main item. These around 9 items are there. But in the case of B2C invoices, it is only the information which helps you to make online payment. Just as we scan for making payments through Paytm, etc. But there we have to enter the exact amount and then we can make the payment. Here they are proposing that you just scan it and even the amount will come and you can make the online payment through Paytm or other facilities like these. So it will be containing only that information and not other information like GSTN of the seller, etc.
Right. Sunilji, I have a question for you. Whether for the class of registered person who required to move from invoicing from 1st October, is it required to issue bill of supply also from invoicing portal?
The bill of supply will not be issued from the e-invoicing portal. It will apply only for taxable supplies. Bill of supplies will continue to happen in the normal pattern itself.
Right, sir. So I was having one questions related to the judgments. I'll just go to the YouTube panel. Yeah. So meanwhile, I'll just look at the questions.
There's also a question whether self-invoicing element of RCM e-invoicing provisions are applicable. For self-invoicing under RCM, e-invoicing is not applicable. It is only applicable where it is a B2B case, like supplies made by a registered transporter or advocates, etc. In that case only. So it has to be a B2B supply or a B2C supply where self-invoicing is there. E-invoicing provisions are not applicable. Any more questions?
Yes, sir. Sir Sunilji, I have a question for you. In case of inverted duty, the High Court judgment has been contested by the departments to Supreme Court. So your view in this, sir?
So essentially, if you look at the provisions of Section 54, Section 54 uses the word inputs and later on it uses the word output supplies. So therefore, there is a good chance to say that the word inputs used here is in the nature of the supply, which is inputs as well as input services, and there's no need to restrict it only to inputs. I would believe that the Gujarat High Court decision is likely to be upheld by the Supreme Court as well. Hello. Hello.
Yes, sir.
Yeah. So I would believe we'll have to wait and watch, but I would believe that it's a well-reasoned decision which can be carried through in the Supreme Court.
So if anyone else want to ask the query, they can directly raise their hands. And
there's also a question, who are the class of registered persons who are required to issue invoicing from 1st October? So these are people who are having turnover above 500 crores. And recently it has been clarified, it's not only just 1920, even since inception of GST, in any year if the turnover exceeds, so if in 1718, 1819 or 1920, the turnover exceeds 500 crores, then e-invoicing will be applicable. Yeah.
Sir, we have taken most of the questions and all the presentations were self-explanatory and was wonderfully presented by CAs Sunil Gabhawalla ji and Geetika ji. So once again, we were very glad to have you for the first time at our forum, and I'll be more than happy to continue this relationship in future as well. Thank you so much.
Thank you, Shubham.
Geetika ji and Sunil ji. Do you have any other question?
I think there's a question of 500 crore turnover is whether it's obviously it's turnover as per GST and not turnover as per your P&L. So it includes all your branch transfers and sale of assets, etc. All those are also to be included for considering this amount or calculating this amount of 500 crores. Thank you, Sunil Gabhawalla ji. Thank you, Geetika ji. And the wonderful deliberations were there from your side. And we thank all the participants also for taking time to listen to this webinar and sparing your time. Thank you so much.
So much. At the screen, you can see our contact details in case you want to get in touch for any of your queries, any of the product, or any of the upcoming webinars. So this was the first webinar for our GST series, and we are going to cover eminent speakers from each and every region. So we thank you so much once again, Sunil ji and Geetika ji.